Talker Research, pretty good outfit. They talked to 2,000 Americans, regular folks, about their spending. And here's what they found out. All right. 77% have changed how they manage money due to economic uncertainty. That would be the tariffs. 86% feel the economy remains uncertain. 58% believe a recession is inevitable. Wow, it's a big number. Average American expects financial uncertainty to last another 10 months. Also, 39% are avoiding credit card interest or fees. That's a good thing. 28% are working to improve their financial literacy. They're trying to figure it out. 23% are exploring different payment options. And 90% are seeking more value from their financial providers. Okay, so in February, I did a event with the chief financial analyst at the Oxford Club. And you may know that I have an association with them all the way back to 2003, and they've done very well for me. And we talked about what might happen under a Trump administration in the markets, okay? But then the tariffs hit and all of that went to hell. And so Alexander Green joins us now. So Alex, did you have any idea these tariffs were even being discussed when we spoke in February?
I did. I'm a big fan of Trump extending the 2017 tax cuts and deregulating business and extending our position as in the energy renaissance. But I'm not a huge fan of the tariffs. And I didn't really mention the tariffs because I don't think that they're a positive thing. I do think that they're positive to the extent that we can get other countries to treat us more fairly. But just to protect American businesses is not necessarily a good thing because it raises costs and invites retaliatory actions from countries overseas.
Okay, but what happened was that once the tariffs were announced, the markets went crazy in April. And people lost a lot of money on paper. Now, I said to my audience, hang tough. And the markets did recover, but the uncertainty and the fear that came about because of the tariffs is still there. Would you disagree with that?
No, I agree completely. You can see that what happens in the market is every time that the Trump administration says they're going to impose or increase tariffs, the stock market goes down. And every time they say that they're going to delay or reduce or negotiate away the tariffs, the stock market rallies. And the reason for this is very simple, Bill. Tariffs create uncertainty when businesses don't know what their costs are going to be. They don't buy inventory. They don't hire employees. They can't expand because they're sort of frozen by the uncertainty. And so the reason that the markets have rallied now 25% from the market low after Liberation Day to where we are now is simply that investors don't believe that the worst case scenario is going to be what we're stuck with in the end, that the tariffs are going to be reduced or negotiated away. So to that extent, the market is celebrated, and that's why we're up 25% from the lows of 2 months ago.
Yeah, but that's what people want to believe. That's not necessarily that would happen. So I told my audience last week that I have sold off some stocks that are speculative, not my core group, not the group that provides dividends, but the ones that are speculative. I sold them because anything could happen on any day. And with these Chinese negotiations and all of that, it's very complicated. Now, when I was in North Asia 10 days ago, I did not see one American car in Japan or China or Korea. Not one. And I was on the road. I mean, we were going. And I said to myself, you know, in theory, Trump is right. We're getting hosed. These countries are not taking our cars and a lot of other of our goods. They're making it impossible for us to sell them abroad. Biden and most of the other presidents ignored it completely because it's such a hot issue and could go either way, but Trump decided to take it on. Now, that leaves the investor in the land of uncertainty, correct?
That's correct. And again, to the extent that we can use the tariffs as a bargaining chip to get other countries to reduce their tariffs, I'm completely in favor.
But that's what's happening, Alex. Alex. I mean, he's going to have a 10% tariff on everybody. That's the admission fee to do business in the USA. That's going to happen. Right. He's not going to blast that out. But if they make a deal with China, and again, very complicated with China, but China's hurting. The Chinese economy is hurting big time. But investors, they're getting whipsawed, all right, every day like this. So then my question to you as a stock picker is, what do you do?
Well, there's a few things you can do. First of all, I'm not a market timer. I do commend you, Bill. If you're going to lighten up your positions, do it after the big rally we've had over the last couple of months.
That's what I did. That's what I did.
Good. So
exactly
good for you. But I'm an optimist long term, because you can look at the long term start of the market and it goes up and to the right. So we know that things that do well over time. But what you can do now is, number one, you can avoid investing in companies that are hurt by tariffs, and not just by tariffs of countries exporting to the United States, but also countries that are exporting that face retaliatory action. So you can avoid the companies that have the big tariff problems. You should also be aware that one of the reasons you don't see a lot of American cars on the road when you go overseas is quite frankly, they make very good cars in South Korea and Japan and other parts of Asia. The best-selling sedan in the United States is the Camry, then the Corolla, and then the Civic, and then the Accord, and so on. So it's even Americans that like a lot of these Asian-made cars. But as an investor, you want to invest in those companies that have such a competitive advantage, or either not hurt by the tariffs, or they operate in industries that are resistant to the tariffs. A lot of service companies, for instance.
Boy, that takes a lot of research, though, Alex, for the individual person to figure that out. I mean, you're going to be up real late trying to do that.
No, you're right. Listen, Bill, I'm a stock picker. That's the kind of company I'm looking for. For the average investor, you know what they should really do is do what you've done with your core portfolio, which is sit tight and ride out the inevitable ups and downs, because you're right. No one knows exactly how this is going to play out. Not even Donald Trump, because he only controls
he doesn't know.
He can't know what the other side's going to do in retaliation for what we do. So that's all the uncertainty. That's why the stock market is up and down, is because no one really knows how this is going to play out. But let me just say that research shows that if you miss the best 10 days in the market over a 20-year period, your returns are cut in half. So if someone gets out of the market completely, they run the risk of missing some of the biggest gains, because you just don't know. Because things could be resolved very positively for American businesses, and that means good things for corporate profits and good things for the stock market.
There's no doubt that could happen. I mean, but China's the key to it, and China is very rough. When I was speaking to them, I made this point to China. I said, in the United States, if we have a recession, people have 401ks, they can finance their mortgages. Many people have savings accounts to fall back on. You guys have nothing. Okay, nothing.
Right. Yeah,
and
no social.
Your 1.5 billion people have to eat. Your economy goes south, it crashes, because the worldwide economy will be affected. All right, you're going to have a problem. So it's best for you, China, and the United States to make a trade deal. That was my presentation. There was no pushback, because the Chinese people have no reserve. They don't have any money.
No.
That's communism.
No, you're right, Bill. There'll be political unrest. They're already afraid. They quit publishing how many young people are unemployed, because they don't want them to see that it's a nationwide problem.
But the government will employ you there. They have enough resources. So if you're out of work, they'll give you a broom, and you'll get enough to feed yourself. But if the more factories close, and that's what's happening now in China, the factories that make the hats and the shirts and all of that stuff, they're closing. And because this month was the worst month for Chinese exporting into the United States in 25 years. And that'll continue. The Americans hold some advantage. And I don't want to get into microeconomics, but the last question I have for you is that people are terrified, Alex, because this is beyond everybody's control. Human beings like to control their environment. They like to control their money, their security. They can't control it. And if you got IRAs, if you got college funds, if you got mutual funds, you can't control that. You're at the mercy of forces far beyond you. And I don't think
Yes.
that's a healthy thing.
Well, you're so right, Bill. With these tariffs, nobody knows. But think about it. Under ordinary circumstances, you don't know what GDP growth is going to be. You don't know what inflation is going to be. You don't know what corporate profits are going to be. You don't know whether the market's going to go up or down. Uncertainty is just part of the cost of admission when it comes to investing. No one can tell you what all those things will be, but we can look back at history and see that nothing has outperformed a diversified portfolio of U.S. stocks over time. And the best thing that most people can do with all these uncertainties they're facing is not to freak out and run to cash. Because if you do that, the risk that you run is that while you're in cash, the market does something like it's done the last 2 months, which is it goes straight up. And then you're faced with the choice between, do I stay on the sidelines while I'm missing all the action, or do I get in and, having missed the rally, be in for the next sell-off? And that's the position you don't want to put yourself in. So I think what you've done is wise, Bill. You trim back your more speculative positions if you're uncertain about what lies ahead or particularly anxious about what lies ahead, but stick with your core portfolio, because even after 9/11 and after the pandemic and after this tariff episode is behind us, we know that over time, sales rise, profits rise, and stock prices rise. And so the average person should really be doing what Warren Buffett suggested you do, which is sit on your hands and just ride it out.
All right, Alex, Chief Investment Strategist of the Oxford Club. We really appreciate your expertise. Thanks. Thank you for watching. Make sure you subscribe to my YouTube channel and follow me on X. Look for @Bill O'Reilly.